Welcome to the Daily Market Recap. Today is Wednesday, July 1, 2026. The market took a collective pause today after an absolutely blistering first half performance. Large caps slid backwards slightly with SPY dipping, while tech decided to sit this session out entirely. The primary driver behind today's cooling action: investors are actively digesting a batch of softer economic indicators and locking in profits after a historic second quarter. It is not an active panic. It is simply a healthy rest stop on a very long bull market highway. Looking at the sectors, it was a total change of pace. Tech and semiconductors, which have been doing all the absolute heavy lifting lately, took a clear backseat today. Chip heavyweights pulled back, which dragged down the QQQ on the bright side. Defensive sectors like consumer staples stepped up to carry the weight, sparked by massive single stock breakouts. It is a classic rotation day as money flows away from spicy AI growth and into stable household staples. Let's do a quick check on the crowd vibe. The greed and fear index locked in today at a chilly 32, putting us firmly in fear territory. This tells us that despite the record highs we have enjoyed recently, short-term traders are getting a bit jittery about the macroeconomic picture and upcoming labor data. The market might be resting near highs, but the sentiment shows retail and short-term specs are definitely biting their fingernails. First up on our radar, the ADP National Employment Report dropped a massive bombshell revealing that private employers added just 98,000 jobs in June. That is significantly below the consensus estimate of 118,000 and marks the first time we have slipped below the 100K mark since early March. While bad economic news can sometimes be good news for the market because it pressures the Fed to cut rates, today it just added a layer of growth caution. The labor market is officially cooling down. Our second big story involves the AI royalty taking a well-deserved nap after putting up a jaw-dropping quarter where semiconductor stocks completely dominated. Names like Nvidia, AMD, and Micron experienced a coordinated pullback today. Investors are asking whether the massive multi-billion-dollar capital expenditures from big tech hyperscalers will yield immediate return on investment. This cooling-off period is keeping the Nasdaq in check as valuation gravity finally starts pulling back on these high flyers. Wrapping up our top news, who knew Cheerios could move a market? General Mills absolutely crushed it today, with shares skyrocketing over 9% after reporting quarterly earnings that handily beat Wall Street expectations. But the real kicker that got investors salivating was their brand new aggressive plan to slash $3 billion in costs over the next 4 years. Proof that even in an AI-dominated world, efficient cost management and staple comfort foods still know how to print money for shareholders.
All right, grab your popcorn because it is time for everyone's favorite part of the show, the daily scoreboard. Let's see who managed to print massive green candles today despite the market slowdown and who got absolutely wrecked by the bears.
Leading the charge on the green team today, we have an explosive lineup featuring RGC, MAS, RDDT, and Bull. These tickers absolutely defied the broader market slump, caught massive waves of buying momentum, and gave short sellers a thoroughly bad day. Reddit in particular continues to be a wild trading favorite, while Bull showed investors exactly what its name implies. Huge congratulations if you caught any of these massive runners. Now, for the painful side of the tracks, the top losers of the day are CRWV, RIOT, FCEL, and MU. It was a brutal session for this group, with Micron ticker MU leading the tech slide after a jaw-dropping run earlier in the quarter. Bitcoin miner Riot also took a nasty hit as crypto equity volatility ramped up and fuel cell favorite FCEL couldn't find any buyers. If you're holding these, hang in there. Red days do not last forever. Let's pull up the charts and look at the key structural levels. For our S&P 500 proxy, SPY, we are currently drifting right around the 745 mark. If the sellers decide to keep pushing tomorrow, look for heavy institutional support to step in around the 740 level, which has acted as a solid baseline. On the flip side, if the bulls reclaim control, the immediate overhead resistance is sitting right at 750, break above 750, and we are back into all-time high blue skies. Moving on to the tech-heavy Nasdaq proxy, QQQ closed out the session hovering near 724. Because tech has been leading the market, this chart is critical. If this pullback accelerates, our line in the sand for support is sitting down at 715, aligned with the recent moving averages. To get the party started again, the bulls need to punch through heavy overhead resistance at 730 and eventually reclaim the 735 zone to prove this dip was just a temporary blip. Lastly, our small cap champion IWM represents the Russell 2000 and finished the day resting near 299. Small caps have enjoyed a monstrous 22% rally in the first half of the year, so a little consolidation here is completely normal. support is strongly established right at the 295 psychological level. If we get a macro-driven breakout, look for IWM to challenge the major overhead resistance at 305 to kickstart the next leg of the small cap rotation. Shifting our gaze over to the digital asset space, Bitcoin is holding steady and trading right near the $59,200 mark. It is recovering modestly from a pretty rocky conclusion to the previous quarter. Right now, Bitcoin is playing a game of tug of war with the bulls trying desperately to reclaim the psychological $60,000 level. Key support is locked in at $58,000. If we break below that, things could get sweaty. Resistance remains stiff up around $61,500. Ethereum is mirroring its big brother, currently defending its territory and hovering right near $1595. ETH bulls are working overtime to prevent a breakdown here. If the selling pressure picks back up across the risk-on spectrum, expect major support to form around the $1550 zone. However, if tech sentiment stabilizes tomorrow, a quick rally up toward the $7,700 resistance mark could easily be on the cards. As for the broader altcoin market, it is a mixed bag of stabilizing action. Most mid-caps and small caps are tracking the modest recovery of Bitcoin, showing signs of life after a brutal end-of-quarter flush. However, crypto equities like Coinbase and MicroStrategy underperformed the broader market today, which is keeping a bit of a lid on explosive altcoin moves. The market is looking for a definitive macro catalyst before launching the next major alt season. To wrap things up, the overall market sentiment going into tomorrow is best described as coiled up caution. We are seeing a healthy pullback inside a very strong structural bull market, and the fear index at 32 suggests that any further downside might quickly turn into an attractive buy-the-dip opportunity for institutional investors. Keep your emotions in check and your eyes on the charts. Tomorrow is the big day, everyone. You absolutely must keep your eyes glued to the screen for the official U.S. non-farm payrolls and June jobs report releasing in the morning. This is the holy grail of labor data that the Fed watches obsessively, and given today's weak ADP print, tomorrow's numbers will completely dictate the market's next micro trend. Plus, keep in mind we have a holiday shifted options expiry, so expect volume and volatility to be cranked all the way up to 11.